Hey everyone, welcome to another episode of Wealth Hour with E.H. Howard. We have here Andy Krafft. Andy is a CPA and a certified financial planner from Luminary Wealth, where he does financial planning primarily for entrepreneurs and real estate investors. He spent 5 years at Ernst Young as a CPA before he became a CFP. So tax planning plays a huge role in the financial planning process for all of his clients. He lives in Charlotte, North Carolina with his wife of 10 years, and they are welcoming their second kid. So congratulations on your second kid, and obviously very happy to have you on. I really appreciate you for joining us today.
Yeah, thank you. Appreciate you having me. Looking forward to this.
Yes, sir, absolutely. So what made you, kind of get into tax planning out of college? Is that something that maybe you studied in or you had some previous, interest in? How did you end up in tax planning right out of college and kind of your process there?
Yeah, I definitely didn't plan on it from the outset. So I actually started in college as an engineer. I made it about one semester, and that was it for me. I couldn't.
Yeah.
Chemistry is what got me, which is funny now because I really enjoy science stuff. But yeah, so then my dad was kind of in the financial world. He was, yeah, he was at the time he was doing wealth advisory work, and his background was a CPA as
Okay.
well. And I was kind of thinking of getting into the business world. And he said, if you have any interest in business or finance, like go into accounting, that'll be a great background. So I went into accounting,
Yeah.
got my CPA, not really sure what I was going to do with it. And then I got an internship at Ernst Young, got a full-time offer, graduated, got my CPA, all that. And I actually started at Ernst Young in the audit side, which was actually pretty interesting because I was auditing private equity funds. So I was like looking at their underlying investments, the underlying companies that they were invested in, and got to like audit their valuations and their projections for those investments. So it was pretty cool. The thing is, I didn't really get to have any client interaction. The extent of my interaction was just annoying the controller. I remember like walking into his office and like him visibly sighing because he knew I was about to ask him for stuff because I'm the auditor. And I did not
Yeah.
like that relationship. I wanted to help people. And so I switched over to the EY had a private client group at the time that was doing tax prep for high net worth individuals, primarily business owners and real estate investors. And so that's kind of how I first got exposed to it. It was brutal, a lot of hours, but a great team. I learned a lot, and that's where I kind of really started to see the power of tax planning. But I didn't really have any interaction with clients at that point. That was kind of for the senior manager or senior management level. So, and I really liked talking with people. I mean, I liked doing the analysis, but I also really liked the people side of things. And financial planning seemed to be a good combo of the two. You got to build relationships and help people and kind of see the impact of your work. But also, there's a lot of analytical analysis that goes on with it. So yeah, so switched over to financial planning, got my CFP, and that's kind of where I'm at today. I've been doing this for about the financial planning specifically for about 7 years, 6 years.
Oh, wow.
Yeah.
Yeah, no, I agree completely. And I tell everyone, I'm like, there's definitely a performance factor that has to be met in this business, right? Especially from investments, strategies, goal planning, so on and so forth. But more than anything, I really think it's a relationship business. And
100%.
that seems like something, yeah, absolutely. And it seems like something that's really what you craved. And I understand that, from being an auditor, it's like, yeah, my relationship is not a wonderful one whenever they're sighing, whenever you walk through the door and whatnot. But when would you have like that aha moment where you're like, man, I love the CPA work, I love the tax planning work, but just I really want to do CFP, especially because you said your dad is on the wealth management side. So maybe like what was that aha moment? Was there a specific day, or you're just like, man, I like investments and I like helping people, or
Mhm.
was it just kind of that slow trickle throughout your CPA career?
Yeah, good question. I think it was like seeing the relationship that my dad had with his clients, and that there was like
Yeah,
a deep relationship, like an actual friendship there, and comparing that to, I mean, not only what I was doing in auditing, but even on the tax side, I was just putting numbers in a tax return, which I think is a valuable skill to learn for everybody to know how the numbers flow through the tax return. But I
yeah,
had no relationship. I also was a little envious in a way of the senior management at EY. They were the ones getting to like sit down with a client and walk through the taxes and tax strategy. I was like, okay, I'm doing all this work, but I'm not actually getting to see the impact of what I'm doing. I'm not even getting to see the client or talk with the client. And that's when, kind of seeing what my dad did on the wealth management side, seeing those relationships that he had just pushed me in that direction.
Yeah, that totally makes sense, and I know I appreciate that so much. Obviously, being appreciated in your job and what you do outside of just fiscal appreciation or monetary standard. Really seeing it like the clients and how it affects their life, I think is really important. So I totally agree with that, and that's really where I'm focusing in at. I'm 2 or 3 years into the industry, actually practicing. I've really studied and mentored underneath people longer than that, but
Hmm.
practicing my own business. I'm excited to kind of get to that year 5, year 6, year 7 mark like yourself, to where you can really focus on servicing clients, right, and those relationships rather than client acquisition, because that's a little bit of a grind, and it's like really that personal relationship of understanding people and their families and their goals and I think is really wonderful. So I love all the points that you just hit on there. Um, and I've seen this with a lot of CFPs and even financial planners, where I really think it is a tremendous benefit to have that CPA and that tax background. Do you think your tax background makes you maybe more of attractive of an advisor to the average client, or how do you think that plays into whenever maybe you're dealing with a new client or prospective client?
Yeah, I do. I think paying less taxes is something that everybody is interested in. And paying too much in taxes is a lot of people's primary concern, especially people who run a business because they're feeling it with self-employment taxes, and real estate investors who are, selling properties and have these big gains, and they're excited about it until they see that they owe, 40% in taxes. So I think that's a huge concern for a lot of people in that space. And so being able to look at how taxes impact their overall plan, I think people on the advisory side tend to just focus on investments or insurance, depending on what kind of advisor you are.
Yes.
And they just look at that in isolation without considering the overall tax impact. And then you have people on the tax side, CPAs, that they're looking in the rearview mirror, just looking at taxes that you've incurred in the past, and that's the extent of it. They're not also looking at, all right, what else do you have going on in your life? And that's just the way that those engagements are arranged. I wouldn't expect a CPA doing tax prep to look at their entire picture. But when you combine the two, I think it adds a lot of value, because I can look at the pros and cons from both the investment side and then the tax side as well, and see, all right, where can we optimize both of these?
Yeah, that's a fantastic perspective, because I hadn't really thought of that specifically from a tax planning professional. How they're always looking in arrears, looking in that rearview mirror, like you said, kind of the taxes that they've already incurred, right?
Hmm.
And I agree, because comprehensive financial planning is such a broad spectrum of different various types of financial professions and strategies. And I think the fact that you obviously have a working CPA background, but also the CPA designation on top of 5 years of that career and experience, I would imagine that's a tremendous benefit, not only to you and your clients, but I definitely agree. You see a lot of planners who get so rooted, in the investments or in the insurance or maybe tax or whatever it may be, budgeting even. So there's just so much that goes into it. I think the more value that you can provide to a client, especially since you tend to mostly deal with real estate investors and entrepreneurs and business owners like yourself, and but as far as the taxes, in your opinion, does tax incentive investments outweigh just investments without tax benefits, or do you look at total return? How big does all that weigh in your opinion?
Yeah, that's a good question. There's definitely a balance. I think you do have to take a comprehensive look at it, the return, and then
Hmm.
the after tax return, and that's something that a lot of people don't consider. Just like a very simple scenario with day trading, all these people saying, "Oh, I traded these
Yeah.
stocks or this
Yes.
crypto, and look how much I made." Well, it's short term capital gain, so you're going to pay 24% or 32%, whatever tax bracket you're in, you're going to pay a huge chunk of that in taxes, versus if you had just held on to that for a little longer, you would have paid a substantially less in taxes. So I think it is important to look at after-tax return, but it is also important to look at, there's like an emotional component to it as well, and a time commitment. For example, real estate has some great tax benefits, but in return, you have to give your time for that, versus with, stock market investments. I mean, they are tax efficient in the sense that if you hold them for a long period of time, you pay a lower capital gains rate, but it really doesn't require much of your time. And so, I mean, the tax incentives are going to be a little less. So there's always, you're giving something in exchange for something else. For example, I have a client who's an anesthesiologist, and he's a W-2 income. So very limited things you can do to reduce your taxes, but one of them being short-term rentals. You're able to use some losses from short-term rentals to offset your the taxes from your W-2 income. And so I proposed that idea, and he said, I have no interest in that. I have no interest in being involved in real estate. And in order to get the tax benefit from it, he has to put so many hours towards it. He said, I don't want to be a landlord. It doesn't interest me. I don't want to put my time towards it. And so even though there would be a tax benefit, it's not worth the cost of his time in that situation. So it's just, taking a more comprehensive look at it. But yeah, it all has to fit together.
Right. No, and that's such a wonderful real world example of really what makes sense goal wise, time wise. Because I agree, you're always trading something. And I have a lot of friends who have done well in real estate, either real estate agents, real estate developers, or just passively, invest in real estate and whatnot. And that's something I say all the time. I'm like, listen, it takes time, it takes grit, it takes hustle a lot of times to do well in real estate. And if you don't want to do that, it takes a lot of money to hire a property manager, so on and so forth. And you know, investing in the market is really the easiest passive way to kind of invest and whatnot. Obviously, it has volatility. There's different things associated with it, but from a time standpoint, from kind of a money investment standpoint, as well as far as not those extra costs and so that are associated with it, like real estate and being a landlord is tough. I know some people and you develop relationships with your tenants and your people and we're all living in a tight economy, so sometimes rent may or may not be there. You might, really like them, and it becomes rather difficult to go collect checks or knock on doors. So it's definitely not for
Right.
everyone either, even though a lot of people are able to provide a lot of wealth in real estate. So that's a wonderful real world example, especially a guy anesthesiologist who W-2 and says, what, I'll take more of the tax burden just enough to do the active management of real estate. So that's
Yeah.
very interesting.
Yeah.
That is interesting. So how much does planning kind of differ, from the average investor compared to specifically just entrepreneurs, business owners, or real estate investors? And I think you kind of hit on it a few times, but
Yeah. With business
what?
owners and real estate investors, there's so many more moving pieces. With somebody that just
Right,
has a W-2 job, I'm not saying that it doesn't get complicated, because if they have equity compensation, or, I mean, who knows what they got going on in their personal life, it can
right,
still get complicated with W-2 employees. But for the most part, I'm going to take a portion of my earnings and invest in the stock market. With business owners, you have to start evaluating what's the cash flow from the business, and how much of the cash are you going to take out of the business to invest for your future, and how much are you going to put back into the
right,
business to grow it. And so there's a big decision point that a lot of business owners need to make at some point, ideally earlier rather than later. And that is, am I creating a lifestyle practice, a practice where the cash flow is going to fund my lifestyle and fund my savings? Or am I building for enterprise value? Am I building to eventually sell? And that's a different conversation, because now you're kind
right,
of, putting all your eggs in that one basket, in hopes that you can sell it to eventually fund retirement, or whatever you want to call it. So
right,
there's a lot of moving pieces there, and the right retirement plan for their business is also another key decision point. But then with real estate investors, it's a similar decision. Are you trying to create a portfolio of rental properties that is going to fund your lifestyle, fund your future savings, or are you really, and then is that something are you gonna hold the properties and gift it to your kids, or are these properties you're primarily buying for appreciation with the idea that you're going to sell this portfolio to fund your lifestyle down the road? And it's constantly moving. Like there is no, I mean, from year to year with these people, there are always changes. Like, oh, we're going to buy this property. Actually, we're not. Or
Yeah.
I'm going to sell this property. Actually, I think I'm going to keep that one. And these all changes, our projections. And it's just, you always kind of got to be on your feet with these type of people. But it's exciting. Every situation is different, and there's always planning opportunities I find for people that have a business or real estate. It's just it's a different type of planning environment.
Yeah, there's no doubt, and really the common association that I see with all three of those people is that usually they have a ton of different areas of income. Entrepreneurs, business owners usually have obviously their business, but they have side jobs, other hustles, other businesses that support their business. Obviously, real estate, you have income coming in from all over the place. So I'm sure it becomes, kind of like a puzzle for you to kind of gather all their, properties, net worth, businesses, income, and it just becomes kind of more of I don't want to say necessarily higher level, but a little bit more of a complex solution that you have to provide for them. And I think that is something that's pretty fun and pretty cool.
Hmm.
And obviously, kind of like what you were saying is what I've noticed a lot of times in my practice is the business owners, the entrepreneurs, so in the real estate investors, they have a really hard time setting money aside. They kind of like being leveraged. They kind of are constantly wanting to reinvest in their business or reinvest in another real estate property,
Yeah.
which I totally understand that. And because I'll talk to a lot of people on the real estate side, and they're like, listen, man, if I totally understood stocks and bonds and the market and all that stuff, then I would put a lot of money there. But I've known real estate. I've made my whole life's net worth in real estate. So that's just what I'm more comfortable
Hmm.
doing. And I said, hey, you know what? I totally understand that. And same for the business owners, right? So I think that's really interesting. But I do try to remind them, hey, there's okay having some cash sitting aside for whether it's business expenses, medical expenses, so on and so forth. You don't always have to be so leveraged, even though they probably are good investments.
Right.
Reinvesting into your business, your real estate portfolio, so on and so forth. But I know those are people who you primarily deal with. So I thought that was a really
Hmm.
wonderful, little piece of information that you gave us there. And I agree. I've seen a lot of that in my own practice and clients as well. But
Yeah.
so, how involved? I've seen your social media. Obviously, how involved are you whenever one of your clients are looking at like an investment property or real estate? Um, how involved are you in that entire process, or is this just something that they kind of say, hey, this is what we want to do. What's your take on it? Kind of what's the level of your involvement in those kind of real estate transactions?
Yeah, that's a good question. I'm not seeking out deals for clients. Like for real estate investors,
Sure.
it's they're coming to me with, hey, we found this property. We think that we can get this sort of income on it. We think this is how much it would cost to operate. What do you think? And so where I'm helping them is looking at the tax implications. What are the current and future tax implications, and what kind of planning strategies can we do around this purchase or this sale, and then also like trying to project cash flows. So going through and making sure that their estimates for the property is realistic. I think people in real estate tend to overestimate revenue and underestimate expenses. So we'll run some best and
Right.
worst case scenarios there. Just make sure that they're not putting themselves in a dicey situation, and then seeing how it impacts their overall plan. Well, like if they take $100,000 out of the portfolio to put into real estate, well, like what does that mean for their future? What does that property eventually have to do? What does that mean for the future sale of that property? What does it mean for cash flows between now and then? So really, just that's the taxes, the cash flow, and then their future projections of their future retirement. How does it impact that? I'm not going out and seeking deals, like I said, but those are some of the things that I help them look at.
Yeah, no, and I think that's such a good point. how does taking out this sum of money affect your retirement portfolio or your overall, planned portfolio, and the different projections there? And you know, I'm gonna go ahead and skip one of these questions because I just want to go ahead and get to it. Is based off your social media, you seem to have a really wonderful knowledge of how rental properties work, how real estate and investment properties work. Thinking about the expenses and stuff that the average person doesn't think about. You think about really a lot of the minute, details and expenses that can really kind of hurt someone's real estate portfolio. And like you said, a lot of people, I agree with you. A lot of people who are investing in real estate, like, hey, I'm making this, top line number, which is the revenue, and they don't think about all the little things, and that's where I think you provide a ton of value. Is that something that maybe you've learned in your own personal experience, or is this just from helping so many clients, or how did you kind of gain this knowledge to think about all the expenses that the average investor, average real estate investor don't think about?
Yeah, good question. A little bit of both. I'd say mostly from just working with a number of clients, like all across the country, short-term rentals, long-term rentals, new builds, old
Yeah,
fixer-uppers. You just kind of see, after seeing a lot of situations, you just kind of see some things that could come up that maybe they don't think about. Like, for example, like
yeah,
pest control. That's an ongoing expense that, like, if you don't take care of that, like, your tenants are not going to be happy, especially with like a short term rental. That could substantially
right,
decrease your revenue. You get some bad reviews. It's like, okay, that's something that you got to factor in. Um, things like homeowners insurance has gone up rapidly over the past year or so.
oh,
And so, like, building some cushion for that. If the roof is 15 years old, it's like, okay, you need to start thinking about having this big cash outflow from this roof, starting to put away some money for that. So it's just, yeah, just things, just situations that I've seen that, you know, uh, has made me try to be a realist, and in some cases a pessimist when it comes to projecting rental income, just so that they're not going to have any surprises or be in a position where they're really tight on cash flows.
yeah, and that's it too. Is the insurance right now is through the roof,
Yeah,
whether it's homeowners insurance, auto insurance, business, general liability, whatever it is. It just seems like it just shot up crazy this year. I have so many clients who are having to dial down, their cash flow to their investments. They're having to dial down a little bit of their savings purely just because the insurance
yeah,
costs, I mean, had like 60% increases or whatever it is. And it's just, that's something that, subject to change, a variable, maybe you don't always think about. And the pest control, I wish I had a client who came up and said, you know what, I've narrowed down all the expenses and included pest control. That's not something that anyone thinks about, but it's something that one of the first things that you'll notice as a tenant, like, dude, there's bugs and cockroaches in here.
yeah,
So that's one of the things that I was alluding to, is like, you think a lot of those expenses that the average person, when they're getting into real estate, wouldn't even think about. But no, that's
yeah.
fantastic. And do you see a lot of your clients doing more of passive, real estate investments that are really just more of a buy and hold, and want to rack up the income, or do you have some that try to fix and flip, and just fix them up, remodel them up a little bit, and then sell them?
hmm
What do you kind of see of, or what do you kind of help with more than anything? I know you mentioned short term rentals and whatnot as
Yeah.
well earlier.
I
So,
mean, it's mostly people that are buying the properties for the purpose of renting them out and holding them for a long period of time. Long term and short term rentals, residential mostly. And I do have some people with commercial. We do. So I have a CPA. I own a CPA firm with my brother as well, and we help a lot of
oh
people with
wow,
real estate there. And we do have a few flippers on that side, and that's kind of unique from a tax perspective. From the financial planning side, I don't have any clients that are purely in the flipping game. They're all, yeah, it's all rentals.
right, yeah, and obviously with the tax background, obviously you like the buy and hold strategies more, But I just didn't know, because I do see a lot of business owners who maybe own a remodeling company or something, and they want to be like, hey, I can buy and flip, and I know a good amount of people who love real estate, but kind of like we talked about earlier, don't necessarily want to be the landlord, don't want to necessarily have to collect the checks, so they get in the habits and the real estate investment business of buying and flipping, using subcontractors and whatnot. and just kind of eat the tax consequence, so on and so forth, and just try to get those, those big gains by selling and whatnot. Um, so in your overall, you've had a wonderful career, not only in CPA but CFP. In what ways have you seen, or what separates maybe your more successful clients in the ways that they've built wealth? How have maybe the more wealthy individuals that you've seen, what are the ways, that they've really built up their overall portfolio, and some that you've seen maybe similarities in them, and more of the successful, more wealth building clients?
Yeah, it's going to sound boring, but I'm sure you would agree with me. It's people who are consistent and patient. People that are
Yeah.
not out there to just try to win the lottery and get rich overnight. Literally and metaphorically, play the lottery. Like it's just people that
Yes.
are consistent with being good stewards of their money, making good decisions over and over again for a long period of time. I have one older client couple who they're in their 60s, and they were both teachers their entire lives. I don't think they ever made over $100,000, like over six figures in a single year. But they now have more money than they don't even know what to do with. They can't even spend it all because they were just so diligent over a long period of time, and they made good decisions. They were, frugal, and learned to kind
Yep.
of just, live on what they had, and put away as much as they could. And now they're very wealthy, and their kids are going to have a nice inheritance. So I think that's not as exciting when you get on like TikTok. You see, oh, here's how you can make whatever $5,000 a month in options trading. It's like, yeah, the likelihood of you being
Yeah.
successful at that is slim to none. Like you're more likely to
Yeah. You
to
talk about gambling. Yeah.
yeah, no,
You
it's
have a better
gambling.
chance
It's
of.
like you're more likely
Yeah.
to make money from selling a course on day trading than actually making money from day trading. But that's what
Yes.
sells. That's what is exciting. And investing in these meme coins, and everybody dreams about just putting a few $100 in, and then like the Dogecoin uh, fiasco.
Yeah.
But people just hope, like, oh, maybe if I just do this, I'll get rich overnight. Where like you'd be better off just stop putting your emotional energy towards those things and just put it towards spending less than you make and putting away the difference and just being consistent with that.
Yeah, I'm not sure if you've read the book, or anyone who's watching has read the book, The Millionaire Next Door,
Oh yeah,
but that is something that has really provided so much perspective to me, and really living within your means. I think that's the biggest thing, and you said it with social media and all the pressure that you have, especially it seems like the younger generation, around our age group has this pressure to be the next like Elon Musk or whatever, and live this just just be so successful at a young age or whatever, and also have just this luxurious lifestyle. When in reality, and this is kind of what the book Millionaire Next Door alludes to, is most of the millionaires are small business owners, or people who maybe don't have the highest income in the world, but just do a great job of living within their means, saving up, not having all the unnecessary expenses of the cars and the country club memberships, and really just trying to put on this persona of wealth, when in reality they actually don't have as much wealth. They have high income, but they don't necessarily have
yep,
high wealth, net worth. So it's really interesting, and I'm glad you said that. And literally, teachers is a wonderful example, and building wealth, it really isn't sexy. Kind of like you
yeah,
said, it really isn't. It's just those small steps eventually all add up, and especially around that 60-year mark, and just trusting the process, being patient, being consistent. So I agree. You can't argue with that. Can't go wrong with that piece of information at all. So what is, I like asking every single person who comes on this podcast, because this whole thing is wealth related,
mhm.
right? Generational wealth. So, what is your own personal perspective of generational wealth, if you don't mind me asking?
Yeah. I mean, the way that I think about it, like when you say generational wealth, is
Hmm.
setting up my children for success so that they're not starting from scratch. I think there is a balance between like giving them everything and letting them work for it. I think that's a tough balance that all parents have to have to figure out. And, doing education planning for parents is something that I see all across the board. Some parents say, no, they need to learn to make it themselves. Others say the opposite. They say, hey, I know how hard it was for me to get here. I don't want them to have to go through that. I just want to make it easy for them, or just give them all the opportunities that they could want. So I think it's finding the right balance there. But yeah, I mean, in terms of I don't know what's best for them, I think it's going to kind of depend on the kid and
Yeah,
and the parent too. But yeah, in my mind, like if I could, just provide a good starting point for them so that they're not starting absolutely from scratch, and they have the knowledge as well, not just money. Like I think, wealth can come in many forms, not just a monetary
sure.
perspective, but, a wealth of knowledge so that they can go out and do what it is that they, feel led to do.
Right. And I do think, the likelihood of a parent who has worked very hard, has built generational wealth, specifically for themselves and maybe didn't inherit themselves, I think you're going to pass down that wealth of knowledge. Kind of like you said, I see, on social media, a lot of people who are self-made millionaire or billionaires, they enact these little, budgeting advice for their children, right? Hey, if you go sweep the front porch or whatever, I'll give you $5. But I just want you to know of that $5, you have to pay one to, a tax or whatever it may be, and then $2 or $3 for, your future, for investment, for savings, and then you can spend two of those $5, whatever you get. So I think people who have typically built generational wealth typically, pass down that wealth of knowledge as well. And I've kind of become more of a fan of Alex Hermosi or Haramzi.
Hmm.
I always mess up his name.
Yeah, remote.
But
Yeah.
and he goes, man, yeah, Hormozy, yeah. And he goes, man, if you were blessed and your parents took care of you, like you don't need to fold if you're sitting at a poker table with pocket aces, right? So I do see that perspective, and there's so many ways that obviously that you can design a trust, that you can design really your estate to set up to where you don't just give your children all this money at once to build this kind of complacency, build this kind of I hate to use the word, but you see it a lot of times entitlement
Hmm.
or laziness, really. But it's nice having maybe a safety nest egg, if you will, for maybe medical expenses, right? Something
Yeah.
happens, or maybe when you're 35, or to help with kids, or so on and so forth. So, I agree with you. There's so many ways to create generational wealth. It does not just have to be monetarily or fiscally. There's different ways that you can provide that.
Hmm.
And there's different ways that, I think it can help out, because we live in an expensive world, but it's constantly getting more expensive, it seems like.
Yeah.
And give them a little head start or push might be a good idea. But everything comes with moderation, right? You can't,
Yeah.
hard to do too much or too little of it. So, but that's just a perfect balance, like you said, that you have to kind of figure out.
Yeah.
So, but no, I agree totally. So that's wonderful. And last little question here. We're kind of a little bit past this 30-minute mark, and it goes a little bit back to what we talked about. I think with the most successful client that you've seen. But what's just one piece of financial planning advice that you think universally just helps everybody? That every person could enact. The average person, or high net worth, or low net worth, whatever it may be. And I think you'll probably have a lot of overlap from a couple of questions
Yeah,
we
no,
got.
I going back to that, I think there's so much value, and it's going to sound counterintuitive, but just learning to be content with what you have. And I know that sounds
Yes.
counterintuitive to wanting to build wealth, but being, content and learning to survive and thrive and be happy on little is actually very freeing. I think being, it can sometimes feel restrictive when people talk about frugality and minimizing your expenses. It kind of feels restrictive, but it's that discipline that actually provides you with the sense of freedom and true freedom to be able to live on a little. There's a Greek philosopher, Epictetus, who has this quote that I love. It says, "Wealth consists not in having great possessions, but in having few wants." And I think about that a lot as I'm planning for people. Like, yes,
Wow.
we want to build your wealth and do everything that we can to grow that for you and your family. But at the same time, there is a lot of value and freedom and limiting your wants and learning to be content with what you have.
Yeah, wow. Anyone who knows me, I'm a huge quote guy, so I'm definitely going to go ahead and lock that one in the archives because I love that, and it really is. The whole idea of being having wonderful financial freedom is to do what you want, and if you want, very little, or you don't need to have a lot of wants, and I think that really it does help. It provides that financial freedom,
Hmm.
and because that's ultimately what the goal is, right? Hey, we want to do what we want to do with the people that we want to do it with,
Yep.
and no, that quote is fantastic because a lot of people think that maybe the idea of financial freedom or wealth or whatever it may be is an abundance, like you said, a large amount of possession, and in reality, if you can live within your means or live simply or comfortably and be content with that. And I agree. And I do agree with you as well as saying, you know what, you could still, I think, be hopeful for the future and still have a lot of drive for the future, but it's really important to be content with where you're at. If you're not content with where you're at today and the people that you're with and the situation that you're in, you're always going to be wanting more, and more is never going to be
Hmm.
enough. So
Yeah.
from a psychological standpoint, I think you do run into issues there, not just from a money standpoint, not just from a fiscal standpoint, but just honestly, like who you are as a person. If you're not happy with where you are in the process and you're constantly chasing those objectives, it becomes very difficult, not only for the people around you, but for yourself more than anything.
Yeah,
So,
absolutely.
I yeah, absolutely, man. But well, that kind of wraps us up here. We're just over 35 minutes. I appreciate all the knowledge and the tidbits that you gave us on here. I know we're going to have a lot of viewers who are really going to enjoy this podcast, and I've learned a lot. So I really appreciate your time and you hopping on, sir.
Yeah. No, thank you. Appreciate you, man. This was fun.
Yes, sir. We'll have to do it again sometime soon.
Yeah, you bet.